Let's kick off with the announcement of a special dividend of 12 pence, interim dividend of 2 pence. Your CET1 ratio also coming in at 16%, so a little bit lower than estimated. What does the dividend announcement today say about your capital return plans for future?
No, it really means we're very dedicated to the capital return plans. We made it very clear at year end that we were on a track to 14%. And because of the really good profitability that we had in this first quarter, £2 billion after tax, at 48%. A huge driver of that was a transaction we did with Alawal. So with the special dividend, what we really wanted to do was to pass the gain from that back to our shareholders. We also ended the year end at 16%, and at that time we talked a lot about, that we will continue to grow our capital. But what we wanted to do as a board is to actually just keep ourselves down to that 16%. On the journey to 14%. It's a great challenge to have, to be so capital generative that you're having to kind of keep bringing yourself back to your start point while you're on the journey to return more capital. So the market, I think, will be very comfortable with the fact that we're below consensus on that. I don't think they were expecting quite such a large special, but we really felt it made sense.
Still 62% owned by the state. With where the shares are trading right now, around 217 pence, does that, from the government's perspective, take a directed buyback off the table?
And the sale is always something that's for the government's option. What I need to do and what we as an organisation need to do is to make sure we can put the best results out into the market, deliver the strongest bank that we can, and make sure that we're ready. So if they choose to do any disposals, we're ready and very willing to and keen to take part in them as and when they might happen.
As you mentioned, second quarter pre-tax operating profit, £1.68 billion, so better than what the market was expecting. But you have guided that the 12% return on tangible equity, the profitability target, very unlikely for 2020. Can you guide a little bit more on that?
No, absolutely. I mean, we've got 16%, I think, CET1 for the 16%, ROE for the second quarter. And it's really a function of the Alawal transaction. And what I know I will spend a lot of time talking about today is actually there's a bit of pressure on income because of the whole uncertainty and the rate curve kind of moving down. And then there's also and that really actually is the driver of the 12%. What's really important for us is that we can control the things we control. We make sure we're lending. We've grown our lending 2.5% in this half. That's a good statistic. We've controlled our costs and taken 173 million out as well in this half. So that, again, a good piece of news. But the impact is on the lending where margin's under pressure and so therefore income's under pressure, and that's why the 12% feels unlikely in the short term.
Yeah, in terms of the net interest income and income in general, and you mentioned the market curve in terms of expected yields, the Bank of England hasn't really been modelling for a no-Brexit scenario. How are you modelling for a no-Brexit scenario?
I think for me the most important thing that we can do as a bank is to make sure that we have the right liquidity. So we're sitting at 154% liquidity. We've got a really strong balance sheet at 16%. We're certainly the strongest in balance sheet terms because of our recent history that you see amongst any of the banks at the moment in the UK. So that side is important and it's ready. And then the other thing we need to do is to make sure that we're administratively ready. So we're all set up in Amsterdam, we're all managing to do our payments and we're doing them all now through Germany. And then it's really about making sure we're engaging and talking with our customers and taking them on the journey to think, what do they need to be thinking about so that we're comfortable with whatever might come our way.
In an environment, though, of a no-deal Brexit scenario, of course I meant no deal rather than no Brexit, you've got big exposure to SME lending. If those loans start to sour, how could that impact the capital side and therefore the potential capital return to shareholders if you need to hold more capital?
We obviously all do the stress tests that we do, and we very comfortably pass them. If you obviously got to the point there was something very dramatic, but the reality is, impairments, they take a little bit of time to come through, even in the IFRS 9 world, when you start to see things moving along. So I think for us, it's making sure that we're lending within the right risk appetite. We're not doing anything foolish now to try to grow our balance sheet, and we're really working with our customers so that we understand what difficulties they're facing so that we can help them resolve them before they get to an impairment level.
Any more plans to grow the top line? I know you're saying you're controlling what you can control, but how can investors expect any top line growth?
No, look, I think the top line at the moment is definitely the challenging conversation. If you look at mortgages, for example, we have a large mortgage book, 140 billion. That earns about 160 basis points. What we've been doing with that book is repricing that in line with the the competition, and it's pricing around 95 basis points in this quarter. So that's a big movement, and that has the impact in terms of growth. So if I look at our underlying kind of income for the quarter, it's about just over 3 billion, so 3.1. That kind of feels the level that we're going to be at for a little while, which still is a good number. And then just work out how do we control what we can control below that to make sure that we get to the right bottom line. But I think as we write new business, the important thing that the business itself returns above an ROE return, which we are very comfortable that it all does, and that we're still working towards that 12% so we can hit it in the medium term.
How painful would it be for you if the Bank of England started cutting rates in a no-deal Brexit scenario?
Look, we're very sensitive to rate cuts, and we've got some, quite detailed disclosures, but that has a really big impact. If you look in the first year, it would impact us by about 144 million in that first year, and then it grows to about 300 million by the time you get to the third year, as you see our kind of structural hedge roll over on it. So it's definitely impactful.
Leadership as well. Well, we're still waiting to hear what the leadership of RBS will be. What sort of leader does RBS need here?
For me, it's true of all organisations. It's people who are absolute fantastic culture carriers, and who do the right thing for the business, and who have customers at their heart. And I'm comfortable that's what we'll get when the board finish their process.
Would you be comfortable and happy working alongside Alison Rose?
It's not for me to get drawn on the leadership contest, but naturally I'd be comfortable.
How worried are you about a Jeremy Corbyn government?
Look, as I look at government and banks, it's interesting. Our primary objectives are unbelievably aligned. What we want to do is to lend to an economy to help it grow. What the government wants to do is to grow the economy. In terms of then working together, we're happy to work with whoever